Next week is going to be epic for the stock of the UnitedHealth Group. I would not be surprised if the stock goes up 50%. The recent sell-off has been absolutely breathtaking. The stock is down 55% in 4 weeks. In December, their CEO was shot dead. Then the company reported bad quarterly numbers, and last week their CEO resigned. Just when you thought it couldn't possibly go any more wrong, this happened.
UnitedHealth shares now at a 5-year low after a Wall Street Journal report that the company is under a criminal probe by the DOJ.
The Wall Street Journal reported last night that the company is under investigation for possible criminal Medicare fraud.
The Department of Justice is carrying out a criminal investigation into UnitedHealth Group for possible Medicare fraud.
If you were making a movie in the horror or drama department, I don't know if you could come up with a better script. Money, murder, surrender, fraud. And just when you thought you have had enough, this guy, the new CEO, drops $25 million to buy the stock of UnitedHealth while everybody else is losing their minds. My name is Mariusz Konieczny and I've been investing in the stock market full-time for 16 years. I'm also the founder of microcapexplosions.com, which is a private membership website for small and microcap stocks. We find unknown stocks before they become popular. Stock market investors are fabulous at 2 things: greed and fear. When they are greedy, which is usually caused by increasing stock prices, they will imagine things that you and I could not possibly imagine. But when they are scared, oh boy. I remember during the 2008-2009 financial crisis, people were telling me that we might no longer need businesses at all. And last week, they had a perfect opportunity to act like complete retards. Man, their imaginations ran wild. The former CEO resignation combined with the criminal investigation for possible Medicare fraud reported by the Wall Street Journal caused them to lose their minds. The stock is a zero. The financial numbers could be fake or all completely made up. That's what they said. However, while the market was busy dumping the stock, Stephen Hemsley, UnitedHealth chairman and now returning CEO for like 1 or 2 days, bought $25 million worth of stock. Yes, $25 million worth of stock in 1 day. He did the classic thing that Warren Buffett has been teaching for years.
You want to be greedy when others are fearful, and you want to be fearful when others are greedy. It's that simple.
Of course, the problem is that most investors want to be greedy when others are greedy and fearful when others are fearful. Another famous investor, Peter Lynch, used to say about insider buying or selling. Insiders sell for all kinds of reasons. They want to buy a new vacation home, they want to send a kid to college, but they only buy for one reason, which is they think the stock is going up. Last week was absolutely insane in the stock of UnitedHealth, but next week I think is going to be even crazier. But instead of fear-driven trading, it will be greed-driven trading, because this $25 million insider buy is a clear signal. Oh, wow, if the insider is buying $25 million worth of stock, which he clearly doesn't have to do, then all of the fear about the Medicare fraud is just a bunch of nothing. Why does this new CEO think that the stock is going to go up? Well, UnitedHealth generates more than $400 billion of yearly revenues. Cash flows from operating activities is about $25 billion per year. Because the company does not have big requirements for capital expenditures, free cash flow is about $20 billion per year. And considering that the market cap is $265 billion, the company is now trading for close to 10 times free cash flows. That's just retarded. Obviously, the explanation for such cheapness is fear. Scared and unhappy people will sell you stocks of businesses for dirt cheap prices, just like happy people will buy them from you at happy prices. But taking the emotions aside, the only logical explanation for such illogical pricing would be if you thought that the company committed Medicare fraud, would seriously hurt the business.
The consequences here, if the story is true and if the investigation results in charges, could be catastrophic for a company like United. The penalty of a criminal conviction here for United would be debarment. That means United would be out of business with respect to serving the federal government.
Of course, I can't tell you with certainty whether UnitedHealth engaged in Medicare fraud, but we can look at some clues. For example, would the CEO buy $25 million worth of stock if the company engaged in fraudulent activities? And nothing has been proven.
While the exact nature of the allegations is unclear at this point, the report says that the probe has been active since at least last summer. In a statement, UnitedHealth says it has not been notified by the DOJ of any criminal investigation.
That report cites unnamed sources. UnitedHealth tells CNBC it has not been notified of a probe, calling the journal's report, quote, deeply irresponsible, noting that the report says the exact nature of the allegations is unclear.
Another logical explanation for such illogical pricing of UnitedHealth stock would be if you thought that the business will not grow in the future, profitability will decline, or people will no longer need health insurance. While it is true that the company suspended guidance, the company said that it plans to return to our long-term earnings growth rate target of 13 to 16%. If this turns out to be true, then the current uncertainty about guidance might just be short-lived. What about people no longer needing health insurance? Well, let's think about this. Insurance companies like UnitedHealth are in the business of collecting premiums from its members, and in return, they promise to pay for their medical bills. Considering that the majority of people cannot afford medical bills when something bad happens to them, there will always be a need for health insurance companies. There's just no way that everybody can become a millionaire and be able to afford medical expenses. With that being said, investors don't seem to be worried about whether there will be a need for insurance companies in the future. The fear is all about short-term uncertainty about revenue growth, profitability, and of course the possibility of Medicare fraud. For me personally, I just don't think that the Medicare fraud is going to turn out to be true. And even if there was something there, I don't think that this will actually hurt their business. Now, if the CEO did not buy $25 million worth of shares, I might have a different opinion. With that being said, it doesn't really matter what I think. What matters is what the market thinks. If the market believes that the CEO's $25 million insider buy means no Medicare fraud, then the stock is going to soar next week. Most importantly, I want to know your opinion. What do you think? Leave me a comment below. And also, don't forget to subscribe to this channel, like the video, and see you next time.